Welcome to the Exit Rich podcast, where the leading authority on buying, selling, fixing, and growing companies, Michelle Seiler Tucker, is dedicated to helping you find the path to retire rich and move on to your next adventure by exiting your business for the desired dream price you deserve. Get ready to exit rich with your host, Michelle Seiler Tucker.
Hi, and welcome to another episode of Exit Rich. I'm Michelle Seiler Tucker, the host of the Exit Rich podcast. You know me. You've listened to me. You've listened to me for years. I've been in the mergers and acquisitions industry for, over 26 years. I'm really dating myself here. Y'all know I specialize in buying, fixing, and selling and growing companies. That's my passion. That's what I do. My last book was called Exit Rich, endorsed by Steve Forbes, and is a Wall Street Journal and USA Today bestseller. In our last episode, we discussed timing, value market trends, and the GPS exit model, the Seiler Tucker GPS exit model. Today, we will see how the six P's found in my book, Exit Rich, can be used to determine your trajectory and exiting rich. As you may have already heard, Spirit Airlines filed for bankruptcy yet again. They did file back in 2024. This time, Spirit Airlines have closed their doors. Spirit Airlines has crashed. A big, huge crash, leaving passengers stranded, leaving investors penniless. Think about this. And you might say, okay, Michelle, that's all great news. What does that have to do with me? They're $1 billion airline. What would this have to do with me and my business? My answer is absolute everything. What do you think it has to do with you? Oh my gosh, you're a business owner. It's a business owner problem. And if you're a baby boomer, has spent decades building your company, this conversation is especially for you. Because what happened to Spirit is exactly what happens to business owners who don't plan their exit from the very beginning and who don't build a solid foundation on what I call the 6 P's that we're about to dive into. So what really happened to Spirit Airlines? Spirit didn't fail overnight. They fell slowly, just like most businesses do. Then all at once, boom, they crash. Why? Number one, let's dive into the top 4 reasons. Cheapest option. They're the cheapest option out there. People flew Spirit because of price and price only. They built their entire company on being the cheapest option. Being affordable is valuable, but there should be more factors to your service and company than just price. In order to increase loyalty, you have to have more than just price. Spirit had passengers, but guess what? They didn't have raving fans. You had people like me that flew Spirit and said, oh my God, I absolutely hate Spirit. It's my only choice right now. There's no other options. They're the cheapest. But then people are questioning it. Is the plane going to get there on time? Is it going to break down? Will my bags fit in the overhead? Will the plane crash? Everybody asks those questions. So you have more objections than you have raving fans. When you don't have raving fans in your business is going to die. It's going to fail. Number 2, they built no buffer. Spirit operated on razor thin margins. One external shock and there was nothing to absorb it. So if you operate on just price, but you have no other things in your business, no other things that can absorb it, like raving fans, extra benefits you get flying Spirit, extra leg room, free bags, things like that, then you're going to end up going out of business because they had no other external factors to absorb the price issue. Their business was built on price and price alone. Early founders do this all the time. They project revenue, skip the reserve, and spend like the good months. And spend like the good month is their baseline. I have business owners say, oh my God, I had a good 6 months. I went out and bought a new car. I bought a new home. But guess what? Then their business fails. You can't base your business on 1 or 2 or 3 good months. You must build a buffer before you think you need one. Minimum, I would say, is 1 to 2 years. 1 to 2 years. People say, oh, I just need 90 days. Wrong, incorrect. Remember COVID? People went out of business because they didn't have enough reserves. They didn't have enough working capital. They had 90 to 120 days. You need 1 to 2 to 3 years. You have your bank account. You should have a savings account. You need working capital. And every industry is different as far as how much working capital that they need. But you need to know your operating runway at all times. Number 3, they ignored the brand signal. Spirit reputation was a punchline for years, meaning people made fun of Spirit. Oh my gosh, you got to fly Spirit. I will pray for you if you fly Spirit. I cannot believe you have to fly Spirit. It was a punchline. It was the joke of the airline industry for years. And leadership struggled with it. They knew of it. They were aware of it, but they did nothing to fix it. They knew they had a problem. They knew they had no loyalty clients, no loyalty in customers, and they know they had no raving fans whatsoever, but they didn't do anything to fix it because they were still filling seats. Huge problem. Here is the problem. Reputation. Here's the biggest problem with reputation. It compounds, whether it's good reputation or bad reputation. They had the worst reputation of all other airlines. By the time Spirit tried to fix the customer experience, the brand was damaged beyond repair. Beyond repair. You will have to pay attention to all these different aspects in your company. Your brand is not your logo. It's not your company name. It is what your founders, customers, and investors say about you when you are not in the room, my friends. Protect it. Protect it early on. If you see your brand to start to diminish, if you see something that is out of your normal brand, if you see something that is different, and if you see your brand to start to diminish, fix it and fix it early on, because many times it's too late. You got to pay attention to the warning signs. Number 4, they had no pivot lane. Literally no pivot lane in the sky whatsoever. In the sky or on the land, they had no pivot line. When the market shifted, Spirit had no alternative model to move towards. No premium tier, no auxiliary revenue that was not tied directly to passenger volume. No flexibility whatsoever. Startups that survive disruption are startups that really build optionality into their model from day one. You do not need 5 business models. You need one that works and at least one lever that you can pull if the core starts to break. Here's the bottom line with Spirit. They stop what I say most business owners stop doing, which is lack of aim. Aim is one of the most important things in business. Always innovate and market. If you don't innovate and market, then you're dying. You're either dying or thriving in business. There's really no in between. You're thriving or you're dying. Lack of aim. Always innovate and market, or you'll find yourself in the same position as Spirit Airlines did. They had no real differentiation. Nothing really separated them from everybody else except for price. No margins for error. They had 0 margins for error. So when the market shifted, fuel cost increased, competitors caught up, and customers wanted better experiences. They had nothing to fall back on except for price. Price with thin margins, no flexibility, no premium positioning, and no real leverage. They weren't a strong business. They weren't a strong company. They didn't have a strong foundation. They didn't prepare their company to exit. Their plan, they didn't have one. Their plan, they didn't have one. They were only a pricing strategy built on one thing, price and price alone. And when that broke and customers demanded more, everything else broke in the business. Why does this matter to you? Well, like I said in the beginning, this matters to all business owners, no matter the size. You should learn from your competitors. You should learn outside of your competition. You should learn strengths and failures from the marketplace. Now let's bring this back to you. I work with business owners every single day. And many of you have been in business 20, 30, 40 years. Some of you are startups and just getting started. So this message is for you as well. And it's very important to pay attention to. You've built something incredible. But guess what? There's a big problem. Most of you are running your business without a clear exit strategy, without building a clear, solid foundation, and not operating your business on just price alone. You're working hard, growing revenue, managing people, but you haven't really defined where you're going. And when you don't really define your destination, you drift, just like Spirit did. This is the hard truth, folks. And this is a wake-up call. Spirit is a huge wake-up call for us. So let's dive in a little bit into the GPS. Let's dive into the GPS exit model that you've heard me talk about before. In Exit Rich, my book Exit Rich, I teach a GPS exit model. This is the biggest mistake that Spirit made, because building a business without an exit plan is like driving without a destination. Your GPS requires three things. Number one, you need to know your destination. Spirit should have had a destination and say, I'm going to sell this business. Yes, I'm public. We're going to sell in 20 years. We're going to sell for this number. Let's say it's $5 billion or $100 billion. Let's say it's $100 billion. What is Spirit worth today? Spirit never had a destination. Spirit knew what they were worth, but they really never had a drive to plan their exit. Because if they did, they wouldn't have built their business on price and price alone. So you need to think about your business and ask yourself, what do you want to sell your business for? This, you should start from the beginning. Like Stephen Covey says, start with the end in mind. All startups should be doing this. All business owners should be doing this right now. Start with the end in mind. What do you want to sell your business for? Do you want to sell it for $20 million? Okay. What you want to sell your business for is not what you hope, not what your friends sold your business for, not what your attorney or CPA says what it's worth, because in most cases, your friends, your attorneys, and your CPAs have no clue what your business is for. Buyers don't care what you need to retire on. Buyers don't care about the next phase of your life. What is your actual financial goals? What do you want to sell your company for? Figure that out first, no matter what stage of your company you're in. Number two, what's your current location? Where are you starting from? What is your business actually worth today? GPS doesn't know where you're going if it doesn't know where you're starting from. Most owners don't know this. They take a guess, or they wait till a catastrophic event has occurred and they say, oh my gosh, I need to sell my business. I need to sell it for $20 million because that's what I need to afford my lifestyle. And guess what? Buyers don't care. Buyers don't pay on guesses. They don't pay for your retirement. They don't pay what you think you need. They pay based on facts. They base upon what the business is really worth. Number three, know your time frame. When do you want to exit? If you want to exit in 3 years, the time's to get started now. But ask yourself, 3 years, 5 years, 10 years. And if you want to sell your business 3 years, you need to start now. If you want to sell in 5 years, build that solid foundation, because timing impacts everything in valuation, buyers and market conditions. Where Spirit went wrong, let's think about this. Where Spirit went wrong was many places. Let's look at the Spirit through the lens of the GPS exit model and the Seiler-Tucker 6 Ps. They had no real destination beyond growth and be cheap. Their destination was grow, 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 and be the cheapest airline that they can possibly be. They didn't build towards a sellable, scalable, sustainable model. They had no flexibility whatsoever in their strategy. In fact, they didn't have a strategy. Throw the strategy at the door, they didn't have one. And most importantly, they didn't build a business buyers would actually pay a premium price for. Government would not bail them out. Private equity is not interested. This is why they crashed. When disruption hit, they couldn't pivot. That's not just an airline issue. That's an exit failure issue for all businesses. This is why this message is so important for you. It's a wake-up call. Now, it's one thing to plan your GPS exit model. You should know when you start your business what you want to sell your company for. I know it sounds crazy, but you really should know that and work towards that goal. It doesn't matter where you are today in your business, whether you're 5 years in, 10 years in, 20 years in, 40 years in. You need to plan that exit. Then you need to look at your business and say, have I built a solid foundation? Have I built a solid foundation, a solid company that buyers will actually want to buy and pay me premium dollar for, so I too can exit rich? Most business owners don't think about their GPS exit, and most business owners don't plan their business on the 6 Ps. They don't build a sellable, sustainable company. Now let's talk about what actually builds a sellable business, a sustainable, scalable, sellable business. Because if it's not sustainable, if it's not scalable, nobody's buying it. At Seiler-Tucker, in my book, Exit Rich, we use what I call the 6 Ps because buyers don't just look at revenue. They don't just look at EBITDA. They look at synergies. They look at what's strategic, what can catapult their business to the very next level. That's what they look at. They look at structure, sustainability, and low risk. They don't want to buy a company that's high risk. That's why Spirit ended up in the ditch, because they had huge risk. Nobody wanted to bail them out. So in order to create a solid foundation, number one, it starts with people. If you don't have people, my friends, you have a glorified job that you go to work at every day versus a job that actually works for you. So you need strong leadership. You need a business that can run without you, the owner. Most business owners don't have that. They have a glorified job. You need to build a team. You need to have leaders in place. You need a business that can run completely without you. And then product. What is your product? Is it in demand? Is it on the way up or is it on the way out? Think about Blockbuster. Blockbuster was a huge company. They built this demand, but they did not have aim. They did not always market and always innovate. They did things the same old way when the internet came, and people just could stream everything that they wanted to. Blockbuster failed. Spirit is in a demand industry, airline. You want to build a product that is in demand on the way up, not the way out, and you want to build reoccurring revenue, my friends. You want to have that mailbox money. Processes. You got to build a business that has processes with systems and SOPs. Your employees shouldn't run the company. Your processes should. You need those processes in place. Now, Spirit didn't go wrong with people. They had great people. They had great teams. They had poor leadership and poor management that took them all the way down, crashed and burned. Did they have processes? Yes, they have processes. Now, let's look at proprietary. Now, proprietary is your number one value driver. This is where Spirit failed miserably. Proprietary. Their brand. You have to look at your proprietary and ask yourself, what are my proprietary assets? Because proprietary can take you from a 3 multiple to a 5 multiple to a 10 multiple. What's your proprietary assets? Proprietary assets are branding. Does Spirit have any branding? Absolutely not. They were branded for the cheap airline that's unreliable, dysfunctional, no amenities whatsoever. You have to pay for everything in addition to your price of the ticket. A lot of times when you looked at the price of the ticket, by the time you added everything to it, they were more expensive than other airlines, believe it or not. So they had a horrible brand. And you got to look at what is your competitive advantage. You have to have more than one competitive advantage. They had one. Competitive advantage was price. They didn't have any other competitive advantages whatsoever. So you really have to go back to proprietary and say, what's my brand? What's my brand reputation? How long have I been in business? Do I have any transferable contracts? Do I have any patents? Do I have a trademark? Do I have federal trademarks? What is your proprietary assets? And build upon that. Spirit had nothing really proprietary whatsoever. That's why they crashed and burned. Patrons. Patrons are your client base. Most businesses follow the 80-20 rule, where 80% of their revenue comes from 20% of their clients. That's called client concentration. And that is the kiss of death too. It's not client diversification. You need clients diversification. You need loyal patrons that will come back to you again and again and again and again. Spirit had zero loyalty with their client base. Zero. Their customers didn't like them. In fact, they hated them. And they just went because it was the only option for price. You build a business like Spirit did, plan to fail, plan to crash and burn. Profits. Now, profits is never, ever the problem in your company. Everybody's like, oh my God, Michelle, I have no profits. I can't make any money. That's not your problem. Profits is never your problem. It's the symptom of not following the other 5 Ps. If you don't have the right people in place, the right team, the right leadership, guess what? You're going to lose profits. If your product, your service, your industry is on the way out and on the way up, like a Blockbuster, like a Toys R Us, guess what? You're going to lose market share. It's going to crash and burn. If your processes are not buttoned up and not tight, you're going to have leakage. Your overhead is going to be too high. If you have zero proprietary assets and you have to fight for your federal trademark name, or you have nothing that really sets you apart from your competition, nothing that makes you unique, you're going to end up going out of business. If you have customer concentration and not customer diversification, guess what? You're going to go out of business. Profits is a symptom of not having a solid foundation on the other 5 Ps. Extremely important. Profit is healthy growing margins. Spirit lacked several of these. And I see the same thing in privately held businesses every single day. Remember, I've been doing this 26 years, especially owner-dependent businesses. If your business cannot run without you, you don't have a sellable asset. You have a glorified job. Sorry to say that, not trying to hurt anybody's feelings, but it's the truth. The facts are the facts. 8 out of 10 businesses will never sell because business owners do not build a sustainable, scalable, and sellable business, unfortunately. Biggest mistake that baby boomers make, the number one mistake I see them all make over and over again, is owners wait too long to sell their business. They don't build their company on a solid foundations. They don't have the right people. They're in a dying industry. They stop innovating in marketing. They don't have their processes buttoned. They have zero proprietary assets. Customer concentration, they're losing money. And they never have planned their exit. They never built that business that somebody actually wants to buy and pay them top dollar. Owners wait too long to sell, and they wait too long to build a sellable business. They say, most business owners always say, I'll sell when I'm ready. I'll sell when I'm ready. But guess what? That's the worst thing you should ever say, because the market has to be ready too. There is a market timing on when you should sell your business. And when you wake up one day and say, I'm ready to sell my business, a catastrophic event has occurred, or I'm burned out, or I want to retire, or I can't take it anymore, or I'm getting divorced, by then it's too late because you probably never built a sellable business in the first place. And while you're waiting, the market has shifted, competition has increased significantly, technology has evolved, AI is changing the way we do business right now, and buyer demand changes suddenly. Your timing is gone, my friends. It's out the window. You'll be part of the statistics why 8 out of 10 businesses don't sell. You don't want to be the top 8 that don't sell. You want to be the 2. You want to be in those 2 businesses that will sell. But you won't be if you don't build a solid foundation. Your leverage is gone if you don't create that foundation, and your valuation drops significantly. What you should do, let's think about that, because I've told you what to do, what not to do. What should you do? What should you do differently? Ask yourself that question. Really think about that. Number 1 is get a real valuation. Your business is the biggest asset. Your biggest valuable asset that you have is your business. But you don't get a valuation every year. You don't know where you stand. You don't know what your business is worth, because what you think it's worth, it's probably not worth what you think it is. It could be worth more. It could be worth a lot less than what you think it is, because market drives value. Market trends drive value. Competition decreases value. Get a real valuation today, not when you're ready to sell, now. Knowing how to increase the value of your business based upon that solid foundation of the 6 Ps will keep you on the right track to really selling when the business is timed correctly and when the market is timed correctly, creating a bidding war where we can bring multiple buyers to the table. That's what you need to do. Invest in your reputation early on and know what needs to be done in your company to continue succeeding. Number 2, really start building your business, like I said, using the 6 Ps, that solid foundation. On the 6 Ps, Spirit operated on really none. They really had 0 6 Ps working for them, except for maybe people and processes. So let me go back and say Spirit probably operated on 4 of the 6 Ps, which was people and processes. They failed on every other P, especially proprietary assets. Turn your business into a well-oiled machine that runs without you by building the solid foundation that we talk about in Exit Rich. Number 3, really define your GPS. Know your numbers. Know your timeline. Know what your gaps are between what you want to sell your business for and what your business is worth today, and how to fix those synergies and how to operate in all 6 Ps. Number 4, build optionality into your business. Have options. Don't rely on one model, one revenue stream, one strategy, because flexibility creates value. Here's the truth. Sometimes I say business owners can't handle the truth, but here's the truth. Spirit did not plan their exit. They did not build a solid foundation on the 6 Ps. They really reacted to the market and lost total control. When you lose control, you're dead. I always say he who holds control, he who has the control makes the rules. They reacted to the market. They reacted too late. They totally lost control. You don't want to do that in your business. You spent decades building your company. This is your legacy, your retirement, your financial future. Don't leave it to chance. Plan it, build it, engineer it, because premium exits are not accidental. They are designed from the beginning, my friends. And when you do it right, when you do it well, you don't just sell your business, you actually exit rich. Thank you for tuning in to this episode of Exit Rich. Please share it with your friends, your colleagues, your inner circle. I'll see you next time on the next Exit Rich podcast.
Thanks for listening to the Exit Rich podcast. Don't forget to check out Michelle Seiler Tucker's Build to Sell Blueprint books and Exit Rich, along with more blogs, videos, and resources at exitrichpodcast.com. Be sure to connect with Michelle on Facebook or LinkedIn and stay tuned for her next episode by subscribing in your favorite podcast player.